What's up, everyone? My name is Dolf Alimara with the Unique Places team at Keller Williams Realty. Today, I'm going to talk about an interesting topic not a lot of people know, which is using private lending to do your rehab projects and make profit when you list or you refinance. I am here with Sam Sadat, the famous Sam from Sam Real Estate Club, and also he has a company, it's called Global Financial Network, that do private monies. Stay till the end, because if you are an investor or a homeowner who wants to get money to rehab the home and get a higher value in the future, this episode is for you. Watch till the end, because we're gonna drop a lot of gems today. Thank you so much, Sam, for being here in this interview. I know you've been working in real estate for a long time. I really appreciate your insight today. Let's educate the users, because a lot of people, they need to know about what we are talking about. So tell me, what kind of person that can use the private lending or like any kind of quick to close lending to do their projects, whatever projects, rehab, fixing before selling. Tell us more.
Yeah, well, thank you for having me.
Yeah,
first of all.
absolutely.
Yeah, I mean, great question, because most of the people that actually come to borrow from us,
Yes,
are basically flippers.
I'm a happy customer, by the way. Just
Thank you.
Yes.
Thank you very much. So
Sell me later.
Exactly,
No, just kidding,
exactly.
just
Yeah, just
kidding.
joking. So, anyways, no, I mean, the private lending is really handy for a lot of investors that want to buy property, fix it, and flip it.
Okay.
So they don't have unlimited resources, cash particularly, and because of the lack of cash, they can't buy the property for all cash,
Yes,
with
yeah.
no loans on it. So what they do is they just come in with a portion of the acquisition price, purchase price, let's say 30%.
Okay.
It's $1 million property. They come in with $300,000, okay, and they get a loan for $700,000, right?
Yes.
So, and then they have about $150,000
To
more
fix the
to fix
property.
up the property.
Yes.
So they're again using leverage to their benefit, coming in with amount of small amount of money to leverage out a good chunk of asset. So because of that, you make money in the process, before repair, after repair. Before repair value or after repair value, it's like ARV of the property.
Yes.
The difference of that is your profit.
Is your profit.
Minus your expenses. And
Even
things like that.
getting a loan, even paying points, you still make profit, because you're gonna close on the property very fast.
Right.
That's why I like
Right.
Private lending, because last time I did a loan with you, it was 7 days.
Yeah.
It's unheard of.
Right.
And it gives you power when you
Right.
negotiate. Hey, I want to buy this property. I can close in 7 days. So can you give me a good deal? And they give me a good deal.
Right.
So
Right.
that's a really good
that's
aspect.
because you're a smart investor.
Yeah,
You know,
thank you.
some investors complain, oh, I gotta pay 15%, 12% for the mortgage and 3% here for closing. That's a lot of money. And all. Okay, very
lot of money.
legitimate question.
Yeah.
Very legitimate question. What is your rate of return?
Exactly.
Okay, if you're
You
going to
should
get
look at that.
15%, then it's a bad investment, right?
Yes.
Because you're going to spend 15 to get 15. But what if you end up getting 60%, and you only gave 15% of it up, and
Amazing.
you still got 45%, with using somebody else's money?
Send me
Yeah.
those deals.
You've done them. You
Yeah.
actually got one of them.
Yes,
Yeah,
exactly.
you actually got one of them.
So that's why. So Sam, the follow-up question is: can homeowner do that? Can homeowner get like a little bit of money to rehab their home and then list it at a higher price if they didn't fix it, to make their property sell for more?
Right.
Tell me
right.
more.
For homeowners, it's a tricky game,
Okay.
tricky situation. If a homeowner wants to borrow hard money, okay, or private money, whatever you want to call it, I like private better because we don't have a committee to decide. It's just privately,
Exactly.
look at it, and and if it's good, we'll do it. So when you look at it,
If he meets all the conditions,
Exactly.
your lending conditions.
exactly. So in terms of the benefit for the customer, for the borrower, it's very clear. They
Okay.
leverage out with the lending money. They borrow. They fix up the property, sell the property. So for a homeowner,
Yes.
it's a whole different ball game. If a homeowner buys that property, what are they using the funds for? If it's for a business purpose, yes, you can essentially get private loans at a higher interest rate, pay number of points, whatever, because you're using it for a business purpose. But if you're going to borrow and use it for personal reasons, then
Not a good
that-
idea to begin with.
yeah, that's under a whole different category, okay? Because a lot of private lenders, hard money lenders, don't want to touch them.
Okay.
Because there are a lot more regulations, with tapping into your equity if you're using the funds for other than
For
business
personal.
purposes. Yeah, for
Okay.
personal purposes.
That's good to know. I
Yeah.
did not know.
Yeah.
Yeah. Thank you so
Yeah,
much for
so
sharing.
it is important, but if it's for for a business purpose, or you are essentially fixing and
Fixing
flipping, and you're
the-
not even owning you're not occupying the property, you're not the primary residence, it's okay.
It's
It's
okay.
a lot easier to do it, yes.
So you're saying that if you are living in the property and you want to rehab it before you list it in 3 months,
Yes.
you cannot do it.
No, I'm not saying that either.
Okay.
Because a good follow-up question. They're institutions, they're mortgage bankers, so to
Yes.
speak. Even some banks out there right now, they actually can give you an home equity line of credit.
Okay.
And a home equity, of course, the only difference being that it has to be fully documented. You're going to
Exactly.
bring in all your tax
Yes.
returns. You're going to have to show pay stub. You got to show all kinds
And
of.
then your income can support the
Exactly. You have to prove ability to repay. What
Exactly.
we call in the industry ability to repay. If you don't establish the ability to repay, then you
Then
can't
they
give you can't give that.
deny you.
They
deny you.
Yeah.
So
So
okay.
that's the only. So homeowners got it a little bit harder, but there are a lot of different ways that they can be creative by going to other banks, other institutions.
Exactly.
Second mortgages are becoming a little bit more popular because people don't want to give up on their their low interest rate mortgages they got 2-3%. A lot of people are equity rich but cash poor.
Exactly.
Okay, and they want to
Exactly.
tap into that. So that need is being filled right now. There are companies that are actually beginning to do that,
Got it.
filling that need.
So Sam, talk to me about an example, like an investor. Let's not talk about homeowners, investors. They want to use private money to buy a home, and then what kind of ROI they are expected to have?
What kind of ROI you're talking about? The investor?
Yes,
I don't
an
know.
investor
I don't know. They're
taking a loan,
Yeah.
fixing the property, and then resell it.
They have hopefully done their homework and they're
Okay.
buying the property at the right price. Obviously, we always check the value of the property, make sure everything is there, and somehow
Double check.
Double
after
for
the-
sure.
That's the one of the benefits
Yeah.
of using experienced lender versus just normal lender or
Right.
like a corporate bank,
Right.
because they do the homework
Right.
for you, double check your work.
Right,
as well.
and it's not just a paper review. We actually see the property. We go
Yes.
look at it.
Yes.
We examine everything because when you look at it like that, you're looking at the territory. When you look at the picture, it's just a map. It's not giving you much. You gotta
Yes.
see it.
Yes.
So with a big
the
institution,
neighborhood,
Yeah.
the
with the big institutions, the appraisal is the only thing they go by, and got a whole bunch of pictures, and that's it. But they really haven't explored the territory.
Mm-hmm.
So once everything meets the requirements, they can borrow 70% of their purchase price. The
Exactly.
example we gave, they can borrow $700,000.
exactly.
So what if you pay 10%? You pay 10%, pay a couple of points, 12%. Okay, what if your rate of return is about 36%? You're still gonna do 24%. What can you do 24% return
Be
on your
happy,
investment?
be do the next deal.
Yeah.
Yeah.
I mean, in an actual, statistics. I don't know. There's so many of them, but it makes sense to me.
Yes.
So I saw that a lot of the the benefits is for the people to basically invest in these types of scenarios, make that return on their investment, than just be conservative, put it in the bank, and do nothing with it.
Yeah.
Because
yeah. It's a lost opportunity.
It's a definitely lost opportunity.
Exactly.
Speaking of opportunity, that's when you find them, when you're in crisis, when you're like in all the stuff that's going on. These are the opportunities, you can explore.
They say when people are running away, you should be moving forward.
Yeah.
And when people are moving forward, you should run away.
Right,
yeah.
Exactly.
It's like the best way to do it to get the best deal.
Right. And the private lending has got two sides, as you already know. You got the private lender, and it's you the borrower, right? And they provide you with the funds, okay, to close your deal.
Okay.
Right. So you coming in, purchasing
Everybody's
that
happy.
property, yeah, they will do that for you. Short period of time, fix up the property, sell it. Create a nest egg, and with which you can actually own a property of your own.
Exactly.
Your home, your primary residence becomes
so
important.
it should be a short term because of the interest rate is a little bit high.
Yes.
So it has to be like a very quick exit.
I would say so. I would say so.
Okay.
I would say 6 months, maximum a year.
Yes.
Because the high interest rate mortgages are unsustainable over a period of over long periods.
You pay high interest.
Yeah, it's high. Although I gotta tell you, right now, if you want to get a second mortgage on your home right now,
It's
about
almost the same.
It's about 12%.
Yeah, it's
From a
almost
supposedly an institution and a bank out there. It's pretty much the
And
same.
they take forever, and they have
Yeah.
a laundry list of requirements to meet to be able to give it the loan.
And
Yeah.
regardless of it's the big bank or the private lender, it's still not good for the consumer. It's still not good for the borrower
Yeah.
because you going beyond a year paying that 12%, it gets rough. Even if you pay to the bank, doesn't matter. That's just a big chunk of money.
Exactly.
You cannot just do that over a long period.
Thank you so much, Sam,
No, my
for this
pleasure.
lovely interview. Thank you so much, guys, for watching this video till the end. I hope you enjoyed. I learned a lot of things today I never knew before, and I've been doing this for many years, so I hope you liked it. If I or Sam did not cover any of the topics that you like, or maybe you want to expand, leave them in the comments below, and I will either make a video for it or respond to you in a timely fashion. Thank you so much for watching till the end. See you in the next video.
Thank
you so
guys.
much, Sam.
Have a great one.